Me, 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 me. Me, 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 me. Who knew I was warming up my voice? Hi, Hugo, Richard, Alexander. Everyone doing okay? Brock, how are you? Michael. You. Jays, how's everyone doing? Okay, and there's a couple interesting things happening before the inflation number. And I'm going to start off with the Dixie. So not much follow through over new highs here over the 4.5. Took it out by about 7 pips, and we're trading lower. Definitely diverged. It would diverge again if we get a hot number, inflation number. Hello, Steve Surrey. Nice to meet you. And you know what else was pretty impressive yesterday? And while we're all talking about higher yields, huge day to the upside in TLT and bonds. And the 10-year came off pretty good on the daily. We might get a pullback to 145-ish or so. And that's what's taken off the pressure on equities here today. We're digging in our heels for a higher low here. NASDAQ gets back, S&Ps get back over 44.50. It's going to look pretty good for a new high, and a similar scenario at 15.2 for the NASDAQ. So, maybe this ended in ABC and this was 1 and 2 and heading up. So part of the problem's been a strong dollar. Part of the problem's been higher yields, and at least temporarily those headwinds for S&Ps and NASDAQ and equities has disappeared. How are you today, Ryan? Partner, how's it going?
Yeah, how's it going, young Dale? You feeling all right?
Young, oh my goodness. Canada still looks like it wants 122. Looks like it's rolling over. And besides looks, kind of stalking the dollar for just, a reaction to maybe shake out some of the bulls back under 93.5. The other thing is I really am starting to stalk this crude for a top. When I look at the 2-hour, what holds me back is this. Everyone see this RSI reading here? So if we get another rally up above 82, I'm going to start scaling into the short side of crude, because I think we'll at least test this again. So that also could take some pressure and some of the worries out of the market, the inflation worries, if we got a break in crude. So, the negatives has been, high commodity prices, strong dollar, and, the energy pinch that we're getting here, and gold has taken off. Silver, same thing. So isn't it interesting how the gold fought off a strong dollar, fought off strong yields, and I'm still not long. Isn't that interesting? So I don't know if we're going to get another pullback. If that was it in the dollar, maybe. So gold and bonds were the stars yesterday, which is, you would think would be risk off, but certainly is not risk off today in the markets. What do you think, Ryan? Did we, I was kind of waiting for the euro to, make a new low, and it did, it qualified, and it did not confirm, and it's turning. But, I was kind of, I've missed everything. I was kind of waiting for it to maybe challenge this little wedge line down here. I don't know if we're going to do that now. That's all the way down at 1480. So, why can't we rally back to 1750 and have a little bear market rally in euro? I mean, everyone hates it. I think DSI is 12.
Yeah.
Okay. What do you think?
I think that lower low yesterday keeps the pressure on, keeps the bearish pressure on, because if if a market's going to start putting a floor in, you want to see prior lows held. So just,
Okay.
and even nicking it by a few pips, I think that keeps the pressure on them. And we can't rally. We can't even get up to 1600. 1750 looks light years
Like a
away.
mile away.
Yeah. Obviously it's still possible. And, if we get CPI falling off a cliff today, that might be a catalyst, but we couldn't move this thing over the poor NFP print. So, it doesn't bode well. I think it's just stuck in the vortex of the crosses. Particularly the yen crosses.
Aussie isn't up as much as Euro, so there's probably a lot of people were short Euro Aussie or long Euro Aussie, and they're unwinding that because the Aussie's not doing much here.
No, that same thing. It can't get back to that 74 handle, really, can it? That's the main marker here in Aussie dollar, that 74.20 handle, and it's just it can't get close. 73.80, and it runs out of puff. But the dips keep getting bought, so you've got to think, in the opposite way that Euro's made a new low. We're talking short term. Aussie's made a fresh high. So it keeps the pressure on, and it's more likely than not that we get a test of 115 of euro dollar, and we get a test of 74 in Aussie dollar. But it's, as I say, I think the yen's doing a lot of the pushing and pulling at the moment. I mean, it looks disconnected from yields right now. Yields down to 156, 155 in tens. Yeah. And yen pairs are still sitting up near their highs. That's a complete disconnect.
Yeah, and just disconnecting gold too. Really didn't pressure gold.
Yeah.
So I really don't hear you commenting much on metals. Or do you trade them, and do you have an opinion on them? A lot of people are still pretty bearish.
Yeah, I look at metals just in terms of what's going on in the commodity space. I'll trade it now and again if there's some juicy levels to look at. I don't buy into these days into the complete inflation argument that gold's an inflation hedge and all that sort of stuff. That's
what is it anyway? Besides an expensive paperweight, as millennials would say. It's
exactly.
archaic.
Sticking in your teeth. Sticking in your teeth. I mean, it's still got it's probably more industrial component than it was before. When you're talking chips and electronics, especially silver, as we know. So in that essence, you've got to look at it more from its use than whether it is an inflation hedge. There's far better inflation hedges out there at the moment. But like you say, it's stuck in a bit of a quandary at the moment, a bit of a sideways action, consolidation, call it what you will. There's no real direction for it. And as we've spoken about before, gold perhaps isn't the trade anymore. It's Bitcoin's the place where people put their safety money, if you like.
And that finally sold off yesterday. We still haven't made a new all-time high. So I guess we have to look at a weekly, but this to me looks like, we may be getting some type of top here on a week. We could end up with a weekly reversal, still a failing rally. It's probably like 88% back. But, people are probably saying it's a layup for new highs. And I don't think it's a layup. I think that if you're, been fortunate to be long once we came out of this wedge, you're still holding it, I'd book it. I'm not brave enough to short it.
No, it's the thing. You book the majority of it, and you leave yourself a little bit to play with if it does break higher.
And look at Ethereum. Not even close to the highs that we had last week, a few weeks ago, while Bitcoin has. And for a while, Ethereum was way outperforming Bitcoin. So I'm declaring a high in Bitcoin today.
Timestamp it.
And you're wrong over the high of the move. If you have that kind of, if it doesn't bother you to risk $4,000, the high, all-time high was what, 64. You have to risk 10 grand to, maybe make 20 or so, but it's still only 2 to 1. So that's not my style, but we'll
I'll
see.
go down the
We'll
because
see. What's the expectation for the inflation number, and which is it, CPI or PPI today?
CPI, they're both expected to be unchanged versus last month.
Okay.
5.3% CPI, 4.0% core.
I just want to show some. No,
Yeah,
go ahead. Go
No,
ahead.
I was just saying you've got to lean towards. We've still got a bit of volatility in the numbers, so it can swing around a bit. Whereas normally inflation moves in 1, 2, 3 pip increments.
Okay.
Can't see
Every once in a
downside.
while, Ryan, I know you've noticed before, that I use what everyone uses, well, a lot of people, 50-day and 200-day.
Yeah.
And, on the 2-hour time frame, every once in a while, you find a moving average that almost acts like a trend line,
Yeah.
where you get a couple of hits here and we're putting in a higher low, 14.9 in the NASDAQ. I know people are wondering if they're in a parallel universe, that I'm constructive on the market after being, bearish for 100 years. That, if we get through 14.9, just arithmetically, that takes you up to 15.4, which is almost at new highs. So this 50, or this is a 200 on the 2 hour. Watch at 14.9 level. Yeah, gold is up, Ronit. Good call. And is Stell here, and Blake?
Good morning.
Good
Hello.
morning. Good morning, brother.
I never thought I'd hear the words safety money and Bitcoin in the same phrase.
Yeah,
I mean, something that goes up or down 5-10% a day scares the hell out of me.
Me too. Especially after Jamie Dimon said it's worthless again yesterday. He doesn't have the same impact that he did last time. It broke when he said that. This time it was in your face, but maybe just, for another day. So
yes.
What are you thinking here, buddy?
Well, first of all, CPI today and the FOMC minutes later on, the market's kind of, I don't know if the data is leaked, obviously never leaked, but the market's trading as if the number is not going to be as expected, maybe slightly weaker. Stocks are up, metals are up, dollars down. I have to admit, yeah, go on.
Oh, we were going to talk about silver. Still, I'm going to try it down here if it happens in the silver around 22, 22.10.
Yeah, we might get there.
And then risk the lows that we put in. Was interesting. When the lows were, what September 21st is, and I know most guys laugh at me about.
Oh, it's some solar thing, isn't it?
No, it was the beginning of fall. Change of seasons, and Gann talks about that sometimes the change of seasons turns out to be a change in direction, just like the weather changes, the weather in the market can change. Anyway, interesting. It always still amazes me that something like that could happen, but you go back to September 21st and we had a lot of turning points.
Yeah.
So, and sometimes they last until the next season, which is, December 20th or something, when winter starts, the solstice.
Well, go long wool in the UK, because we're getting snow by Halloween, apparently.
Is it cheaper than cotton? Well, wool is cotton, isn't it? No, wool is from sheep.
Yeah, wool's from sheep, yeah.
Oh, you're going to kill lamb chops?
Eat them first.
To stay warm?
Yeah.
Anyway.
Maybe Blake remembers lamb chops. You don't, do you still?
No.
It was a puppet. Anyway.
So data-wise, I mean, we've been saying for a while that we think inflation is going to be sticky and it's going to be high for longer than the Fed. And now most people said, oh, it's going to be transitory. Well, it is turning out not to be transitory. It's been months already and it doesn't seem to be an end in sight. Question though is, you're going to get weak prints every now and then. So, the market's kind of maybe preparing for one today. I'm not sure, but I think we have the FOMC minutes later today, and I don't want to speculate on the number. I can't really guess what it's going to be, but in the medium term, inflation should be going lower. But medium term is not months from now. It's going to be
2023.
Yeah, maybe further than that. But So yeah, so
Anything
that's
on the dollar that is catching your attention? This was a big area. Blake's been talking about this being 38% back, and getting above it would be constructive. This is kind of sloppy. I mean, it could pop again. If it does, I'm going to sell it. So one thing to keep in mind, if you're a dollar bull, look at the weekly. Okay.
Wait.
If it breaks
Before
you go on.
I want to say something. And good morning, guys. But why is that sloppy, Dale? I want to ask you on your chart.
Well, so far, just no follow through over 50, and last week we had an inside week, right? And so we've taken out the highs of the prior 2 weeks, and if we start trading lower on the week, on a Wednesday, it may not bode well, and we could end up with a reversal week to the downside. I'm not saying that we're going to crash, but why can't we pull back to 92 before we go again?
But that's like what you were just showing there on the dollar index intraday. That's all it is a wedge. It's just a bullish wedge that's developing. We're just knocking our heads up against.
Let me see it.
Oh, okay, sure thing. Here you go.
Because I'm open, and I definitely pay attention to what you say. I just was surprised. I just thought there was a case there wouldn't be a lot of follow through. Okay.
Yeah, this is the bullish wedge that's been developing,
okay.
And we've been noting it since last week. So it's and it's holding too. We did. I'll say I did have originally the trend line right here, but I'm you got to make adjustments as as you go. But the fact of the matter is that we're making higher lows, right? Okay. So this is going to be determined today. I really have that much confidence. I don't know if I have 100% confidence that inflation, Stelios just mentioned, inflation should move lower over the medium term.
Yeah.
But how do you feel near term, Stelios? I know you just said you didn't want to make a call, but how do you feel?
Near term, I think inflation is going to be stubbornly high. But for today's number, is it going to be 4% core or 4.2 or 3.8? I don't know.
I'm gonna tell you something just from I was having this conversation with my wife yesterday. Because I was at her. If you guys don't know, she has a business that she curates local goods around here, and and sells her all these products from all these local makers, and she does like conferences, and so like when people come out of state and they come into Arizona to do, they do big conferences here, especially the weather is so nice this time of year. So corporations buy these these gift boxes for their executives that come in, and blah 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 blah. And so my wife helps. She's been doing this for years, but she's been talking to every maker that she has relationships with here in town, and they can't get product. They make their products here, but they can't get all their glass containers are from China. Their boxes, their certain aspects of what they built come from China, and they can't get anything. And just give you an idea of a shipment. My wife's just she's getting boxes delivered, and in the thousands, it's multiples of what it was 2 years ago. Multiples, and when I say multiples, 3 times the amount just to get it delivered. So she's like, obviously, I have to pass on these prices to everybody. I have to. That's the only way I can survive, and that's the truth with everybody. And so it is it's really I know the Biden administration, I guess, is meeting with. Have a big meeting on I think it's the port in Los Angeles, but a big meeting today about this shipping issue, this bottlenecking. But I don't know if it's peak yet, but it's not going to be peak for the people that are paying, which is us. It may be peak as far as maybe the market's worrying about it because, you know, hopefully we'll have some sort of, you know, we'll be able to rectify the issue, but it is going to make ripples for months to come, and it is going to create a massive issue for holiday gifts. And so if you live in the US or actually anywhere for that matter, you should be, and you celebrate the Christmas holiday, you should be shopping right now. I'm just telling you right now.
I got your gift, Blake.
Thank you. I've been waiting for that bag.
It was for summer to end. Congratulations, you made it through another one.
All right, cool. Well, I guess we should talk a little bit about inflation. As we go into the CPI. This is the bullish wedge that I'm looking at, and yes, it is the biggest. My opinion is the biggest level of resistance between 94.50 and 94.70, which is right here, the high from back in September. That this whole zone, if you watch the morning edge, you've seen this chart for forever. We're just knocking our head right up against it. Is today the day that it's going to break higher? I'm not 100% confident of that.
I hope so.
But it'd be definitely put a little bit of giddy up in some markets if that happened. But we're really tight here. We do have producer prices tomorrow, so don't just rule out that CPI is didn't move the market. We do have producer prices, which arguably might be the more important number going into this week. So anyway, but here's the dollar index, and that's what I'm looking at. As far as the S&P goes, we continue to monitor this wedge. We continue to make lower highs. I wouldn't be surprised if we see 42.50. 42.50 is going to be major support. Okay, it's a big breakout point. Big test right there. It's going to be really key support on the way back down. We've come out of an ascending wedge, but we have another wedge moving lower. So I'm not overly convinced that this is a real bearish move yet. We'd have to get pretty solidly below 4,200 for me to think that we're going down to 4,000. So right now it's, just kind of stair stepping our way lower, which doesn't make me overly excited about the markets in general. But I want to hand it back off to Ryan and Stelios. Any last minute comments about the dollar or the markets before we head? Oh, one last thing too, if you guys are all trading the dollar, and then I'll get back over to Stelios and Ryan. Looking at gold here, we do have an inverted head and shoulder pattern. So in case gold tries to get up and move today, gold has the potential, and I haven't felt this way for a while because gold's been trading so heavy. Gold has the potential to actually make a move towards 1830, 1840 again. If the dollar gets, shellacked today, which is possible, we could see gold really spike up towards, I don't want to get everybody too excited because I know everybody's bullish gold. Everybody I talk to is bullish gold. And I talk to a lot of people, a lot of quote unquote economists and portfolio managers, and everybody's just bullish gold. But as you guys know, it hasn't been moving. So anyway, some food for thought. Let's go back to Stelios. So Stel, what do you think here?
Regarding U.S. inflation and the dollar, I think it's going to be, I've said before, I think inflation is going to be persistently high. Now, how does the dollar react? It will depend on what the Fed tells us. Are they going to stick with their plan or not? What I wanted to mention today was the pound, because we got some data there out of the UK. GDP was better than expected. Manufacturing production, industrial production, it was all green. So the market's kind of starting to get ahead of itself a little bit. We're pricing, as I said yesterday, we're pricing a full 15 basis points hike by December, which takes us to 0.25, and then starting to price more in early 2022. I think this will probably continue, and we'll see. I've been talking about this for a while. I think we'll see euro pound the 83s, and then
stop.
Yeah,
kiss my butt. Okay, continue on.
In the short term, we can do whatever we want, but I'm not talking today or tomorrow.
Ryan's laughing because Ryan's short the euro sterling, and I'm sure he was feeling. When we were up here, I've got a core long, he's got a core short. my core long is like right here. And I don't know, your core short's from like years ago, Ryan. And I know when it was trading up here, you were, you know, and I was like, I did take some profits up here, but when it was trading up at this 86 level, you're probably, you know, when it was, I was like, oh, you know, it looks bullish, and you're probably like, kiss my butt. So I just had to say it. I had to get it off my chest.
Yeah. Anyway, I think we're getting there, and I think that's when the next leg is going to come, and I think it's going to take us through probably 90. But we have time. We still have time for that.
Okay. So well, let's turn it back over to Ryan really quick before I have to say kiss my butt again, Dale. So Ryan, how are you feeling about the inflation data going into today, and the dollar and where we're at with the S&P, yada yada yada?
Yeah, I think we've got to expect some more volatility in the numbers. You know, we could see them swinging around by 3 pips, 4 pips again. The path is definitely still higher. There's nothing that says inflation is going to be dropping meaningfully anytime soon. We may get some variations. I think and looking at it again, I think there's a bit of a disconnect, as I said earlier, between the dollar and yields at the moment. That potentially is getting back more into the rate divergence trade now. People are moving more into thinking about rates. The taper's done. You know, the most that's going to happen to a taper is that maybe they extend how long until they end it. The taper's coming. It's done, finished, forget about it. Rates is what we're moving on to. And that's when you start to get some really funky trades. One of the things I'm getting an itch for is going long Aussie dollar, because I want to fight the RBA in their 2024.
Wait. Did you say you want to go long the Aussie dollar?
Yeah. It's
interesting. I was actually just having a Twitter message conversation with one of the guys that I used to trade with for years, and he's getting bullish the Aussie against crosses. He's not playing the Aussie on, you know, against the dollar. We were just talking about some of the more complex, you know, commodity crosses. But anyway, I'm sorry. I since you mentioned that, I was just thinking, wow, that's interesting. I was just messaging him 30 minutes ago. So
yeah,
what are you thinking?
That's my query as well. Well, my question at the moment is what to buy the Aussie against. So that's what I'm currently going to get my head down in the chart. But I've been calling, to put it politely, I've been calling bollocks on the RBA's 2024 call for a rate hike. I reckon they might even be hiking as soon as next year, like everyone else.
Okay. All right. So that's how you're playing it. That's interesting. That's how he is thinking about it too. And he was looking at the Aussie Canadian. He thinks the Canadian might be a little overbought here in the near term. Yeah. So, you know, I mean, you can clearly just by it, and I haven't looked at this chart in a while. He just did mention it to me, and we were, you know, kind of chatting about it. But even just from a risk reward perspective on a, you know, just on a range basis, you know, I mean, it's clearly at the bottom of a range if you want to trade it into the range. So it's just some food for thought, just because you brought it up, and I was like, huh, it's interesting. Okay, we are about less than 2 minutes away from the data. So I'm going to pull up, you know, this dollar yen has been so strong, and we could have probably a, you know, 2-hour long conversation about, is the dollar yen a yield or yen or dollar, or, you know, what type of move is it? But regardless, it's bullish, right? Euro continues to trade below 115.70. It still trades heavy. I know, you know, we get bounces intraday, but, you know, you can see how heavy it is. I'm going to monitor the US dollar, Japanese yen as we go into this data, because it should be the most clearly reactive to the CPI data. Now, if you guys want to, if you guys are ForexAnalytix subscribers, make sure you go over to where it says, the news flow is the live blog, just so you guys can, anybody can access that.
I'm just prepping that now, so you'll see that pop up.
All right, and then if you go to calendar, you can click here where it says open data flash, and so I'm going to move that out of the way into my other screen. Then I'm going to bring it back.
What a great website!
It's just, you know,
got everything.
It's tools for the individual trader, you know.
Yeah,
so
it's a great website.
Thank you. Appreciate it. We've worked hard, as you know, Dale, over the years.
Yeah, spent a lot of money on it.
Yeah,
That's
all
a
of us
lot of
except
money.
Steve. Steve's done nothing.
Oh
Steve
yeah.
doesn't do anything. Oh,
Okay.
Steve, are you here? Oh, he
He's
is here.
not. He's not.
Oh, he's not.
No, he's
Okay.
not.
That's
Okay.
when we only talk about him when he's not here.
Okay, in line. Actually, you're a CPI 5.4, core CPI in line. So I don't think that's gonna do
Yeah, it's not going to really move anything,
4%.
right?
Yeah.
No, I mean, month over month, it moved up. It ticked up a little bit, but I mean, it's in line with expectations. Stocks are not moving much. The dollar's not moving much. So I guess maybe what we can look forward to is, like I said, tomorrow's
Pub?
producer prices might be more of a mover. So,
And the minutes as well.
oh yeah. Well, what are the minutes going to tell us that we don't know? I mean, I'm playing
Yeah,
devil's
you're right.
advocate
You're
here. I
right.
mean, you know, I know what the Fed's thinking over the course of the next few months. I don't, you know, over the next 7 or 8 months, I think I know what the Fed's thinking, that they're going to just start tapering. So, I mean, are we just going to find out that the taper is going to happen sooner rather than later? Because I know what that means. If it happens a little bit later, the dollar amount's just going to be higher. So, you know, when does it start? I mean, are we going to get an idea from the minutes? I don't know.
Maybe.
You might get a bit more on the voting intentions, but you know, the Fed minutes used to be a big thing, but now we get Fed speakers, you know, 5 times a day, and each one speaking 3
right,
times a month.
and you're right, Ryan. In every meeting we have a presser, so it's like, okay, you know, but I think that's the gist of it, right? And once we get past tapering, you know, maybe the minutes are going to matter a little bit more, because we can see at what if the Fed is to raise rates moving forward. That's a big if. You know, what's the what's going to be the pace of that, and maybe we'll pay attention more. But as far as tapering goes, we know what we know, and I don't think there's anything that we don't know. So anyway,
Well, we don't know what we don't know.
we don't know, but you know what we don't know is we don't know what producer prices are going to bring tomorrow, and we also don't know when you know, ForexAnalytix is going to pull down the pricing from the special offer that has been out for, you know, it's supposed to be done on the 10th. We had a couple people that are just wrapping up their method of payment, so we're going to be pulling this down. So it's up there for now, but it'll be leaving. So you guys take advantage of that while it's here, because once it's gone, you probably won't see it for several months. So that's the special pricing that we have for the ForexAnalytix system. And make sure you guys also visit our webinar sponsors. You know, visit Forest Park FX. If you are not receiving you know, cashback rebates from Forest Park, you're not figuring out how to get ForexAnalytix for free, I actually have a check that's sitting on my desk right now that I have to go deposit. It's only one of the only kind of checks that I actually get in the mail. So it's cool. I get it from my trading, which I never had before, but Forest Park made that possible, and we've been using them for years. I just now got the chance to start using them like that. Steve's been getting those cashback rebates for like the last 3 or 4 years now. So anyway, great company to work with. I'm going to turn it over to Dale, because Dale, you have an interview.
Carly's with us today.
Cool.
Carly Gardner.
All right. We'll have a great interview, and hope you guys have a wonderful conversation. Stelios, kiss my butt. Ryan, have a great day. I'm just kidding. You know,
Love you too, bro.
Until you say you're bullish the euro sterling, I'm just gonna say kiss my butt. All right.
So Carly made a great call on rates last time she was here with us. So looking
awesome.
forward to
Well,
speaking
make sure
to
everybody sticks around. Okay.
Okay. Thank you, Blake.
Thanks,
and
guys.
Thanks, everybody.
Stell and Ryan,
Bye, Dale.
best team on the net, the dream team, and welcome back, Carly. How are you? Waiting to hear your voice.
I'm here. Thank you. Good morning.
Good morning, Carly. You made a couple of nice forecasts
Well, thank
last
you.
time we were on. You know, one of them, you know, you were getting some angry tweets because you were looking for lower yields, and they bottomed at 113, maybe just a little above what you were looking for, but they definitely directionally you were right. And if you want to share your screen,
Sure.
I'm interested in what you're seeing now. For
Okay.
our audience today, Carly implements option strategies with her forecasts of market direction, and interested in, what's on the radar for you right now. Okay,
Sure,
there you go.
absolutely.
So you're friends with Jim Cramer.
I am, yes. Jim
Okay.
is a good friend of mine. He's a nice guy. First, I just want to let people know who I am real quick, and then I'll
Okay.
take a look at the charts.
All right.
Carly Garner's my name. If you have any questions, comments, concerns, here's how to reach me. I am a futures and options broker, so probably have a little different perspective than a lot of people you have on this show. We basically run a boutique brokerage shop. So we offer services like trading services. We provide people with trading platforms, give them advice, guidance. We answer our phones, which is something that's rare.
Wow.
I
Well, you're
know.
back
It's
in the
totally
20th
crazy.
century.
It's insane. So that's what
I
we
think
do.
it's great.
All
Everything's
right.
relationships, isn't it, Carly?
Oh, it absolutely it is. It is.
So, I mean,
So
how do you
it's a
form a
good time.
relationship with phone prompts?
Exactly. And
Yeah.
I mean, the reality is there's a lot, the futures markets are, it used to be when I first started in the business in the early 2000s, it was something that only a select few people with money or whatever had access to it, or most people just didn't know how to participate in the futures markets or didn't have access because it's a little more complicated as far as logistics and getting the accounts open and things like that. But nowadays, that's not the case. Nowadays, literally everyone with a computer with some minimal requirements can open a futures trading account, which is great. But it's also scary because I talk to a lot of people that truly, they open with an online brokerage firm that doesn't give them any help whatsoever. But these people need help. They really honestly don't, they can't even calculate profit and loss. I mean, just
They
simple
may not
stuff.
even be suitable.
Thank you. I agree with you. Yeah, so technology's been great, but it's actually truly kind of scary. So
yeah, what were you paying for quotes in 2000? Do you remember when you
yeah,
first came
so
in?
when I first came in, the quote, most markets we were just starting to kind of go electronic. So everything at that time was pit traded for the most part.
Yeah.
And so if you paid for quotes, what that meant was you were like, there was a guy standing in every pit, maybe two guys in some of the bigger pits that were recording prices like on maybe a handheld or maybe on paper, depending on how early you go. And then they would report that to someone else, and then someone else would input that into a computer, and then I would see it on my quote screen. So that's a lot of labor going on there.
Yeah.
So the quote, ironically, actually, the quotes are still about as expensive. So right now for CME quotes, I pay $460, I think, somewhere in that ballpark a month. Back then it was about the same, which is kind of crazy. But nowadays what's happening is the professional traders that pay the higher rates at CME are kind of subsidizing all the small traders. But as a broker, for me, it's worth it. As somebody that's not a broker, they might be frustrated at that. So
yeah. Okay. So what platform are you using for quotes there, Carly, that we're looking at right now?
This is QST, Quick Screen Trading. And this is really the primary platform I use for charting and things like that. Honestly, it's an excellent, fabulous platform. They're probably not the best at marketing because most people I mention it to don't have no idea what it is, but it's actually it's really great.
Yeah,
it's a little pricey, but you get what you pay for. So
for sure. So since we last talked, there's been a lot of action. Kind of a strong move in the dollar. We've had rates rally from 113 into the 150s. And
we have
looking it's staring at the March levels of 178. I'm kind of thinking pullback here before higher. What's your view, and what kind of option strategies are you implementing?
So I think I actually am bullish treasuries, bearish rates again. I think we had a nice little pullback, and I think that this is temporary. I think we actually continue the uptrend that we started earlier this year in treasuries and downtrend in yields. And there's a couple reasons I think that this is a chart of the TLT. Even though we focus on futures, the TLT is a really good way to just see a big long-term chart.
Had a great day yesterday.
Right. Yeah.
It was
so you
up
can see,
over 2 points.
It was. We're kind of holding trend line here, which makes me feel pretty good about it. Now, treasuries they're a messy market, like most markets, honestly. So even if we're right in treasuries are bottoming here. That doesn't mean we can't probe lower and run stops and things like that. So it's going to get a little messy. So what we've been kind of, what we would encourage our clients to do with this type of a market is just keep it simple, very covered, something like covered calls, go long futures, sell close to the money or at the money options against it. That way you have a foot in the door, but you have a really nice downside hedge. So in the 30-year bond, you can sell. The March options are still a little thin. I'm sorry, not the March. The January options are still a little thin, but you can collect 2,500 or maybe a little less for an at the money option. That'll give you a 2-handle cushion to be wrong on the downside, and I think that's probably enough to get people through. And for higher
That's a
rates
nice
now,
hedge.
yeah, I mean it does cap your upside potential, but you can, you know how this game is. Defense
Yeah.
is probably more important than offense, and then just go from there. So
Yeah, in the NFL too.
sure,
Except lately,
absolutely.
there is no defense lately. Anyway,
Correct.
so that's interesting. I don't suppose you're looking for new highs. Could it be like what strike price call are you looking at?
Okay, so I'm going to go to the 30-year bond future chart, and 30-year bond future charts get a little messy because they expire every 3 months, and so you see all
Yeah.
this snowflake over here, and everyone always asks, well, why don't you use continuous charts? And I get it, continuous charts are pretty, but you're literally looking at like fake data. So to me, it's just not my thing. So I don't know. I think we'll see new highs above and beyond what we saw earlier this year. I don't think we're going for anything like what we saw in 2020. I think that's just a little bit crazy. But
So
this is,
TLT about 160. If you go back to the TLT chart.
yep,
is
let's
that
go back to TLT. I think we're probably looking at, yeah, I think somewhere around the 160. We'll see. Gotta move sorry about that.
It's okay.
Should have had this marked up here, but I'm a big believer that previous support becomes resistance. So I mean, we're
Okay.
probably looking at 155-ish. Honestly, though, it tends to be a little bit of a range. So I would say somewhere between 155 and 159 on TLT.
See,
It's pretty
support and
reasonable.
resistance levels
Mhm.
are not made of cement. They're more like mattresses, aren't they?
They are, and yeah, too many traders that
Beauty
I talk
rest.
to. Yeah, they think it's like down to the tick, and then
Pip.
they,
Yeah.
well, it broke your resistance. I'm like, well, I mean, not really. That's not how it
It's a
works. I wish it
zone.
would. Yeah, exactly.
I know.
So
Okay.
that's kind of what we're looking for in treasuries.
Okay. What else you have on the hopper?
So is anyone following natural gas?
Oh, who isn't?
Yeah. Oh my
Especially the
goodness.
Europeans.
What a
Huh?
mess.
Yeah.
What a mess that market's been. So natural gas has not been necessarily our friend lately. We actually, I had a good feeling that natural gas was going to 650. We actually went on Jim Cramer, he used our analysis and said nat gas is going to 650. It literally did exactly what I thought it was going to do. And somehow the trades just freaking did not work. It's the thing about the nat gas market is when it starts moving, the option in this case, it was actually more dramatic than any, like the VIX on the, well,
Yeah.
not the VIX, that's the wrong word. The implied volatility on natural gas options exploded to 140. I mean, you can
Yeah.
imagine the chaos of the VIX being 140 in the S&P, it was like that.
Yeah.
So the
Yeah.
option market basically became broken. So we had bullish strategies, but it didn't matter because deep out of the money options were gaining more value than at the money options. I mean, just total chaos. The puts, as the market was going up, puts were gaining value. So like any
Wow.
bullish spread you had on, kind of just lost money, even though it was in
You
the
were
right
right the
direction.
market and
Yeah.
the
Now-
efficiency of the vehicle
yeah.
of the options market is what
Correct.
hurt you.
It
That's
just-
very aggravating.
It was frustrating. Well, and the worst part is I just mentioned in the bonds, the covered call idea, we had some clients that we had in with covered calls. So we were long futures and short near the money or at the money calls against it, which in a normal functioning market, your delta is basically 50%. So as the market goes up, you make money, not as much as you would if you were just naked long, long futures, because the option gets in the way, but you get the time value and it tends to work out pretty nicely usually. But in this case, the at the money options were gaining in value as much or more in some cases as the future, which really shouldn't happen, but it did. So but the good news is if you have enough margin and time, you can wait these things out and they usually work each other out. Let me show you the chart that we're looking at here.
Okay.
So, and this is just actually just to kind of give you an idea of how much volatility we've gone from. Like natural gas is known as the widowmaker for a reason. It's quiet until it's not, and that's kind of what we've seen. We went from this kind of normal volatility to seeing these swings that you see here are basically, let me see if I can get my calculator out here, like 1 day swings. This is per contract, $7,000-8,000 in both directions per day. So it's really easy to get chopped out and messed up and that. So we'll see how things go. My personal opinion of nat gas is like we've got two things going on. We have fundamentals here in the US, which quite honestly are not necessarily that bullish.
One of our attendees is making the point that there's a persistent large net short position.
Yes,
By
that is.
who is the net short? Is it commercials?
No, large specs. Oh, sorry.
Large specs. Okay.
Yeah, and we had pointed this out. So that's I'm glad that he mentioned that. So the interesting thing about this whole move is usually when natural gas starts seeing a really big short position, it's when the market's at a trough, like here or, down here. In this particular case, the really big, large net short position accumulated up here around about $4, somewhere in here.
Mm-hmm.
Everyone just went heavily short. And so that's why we kind of thought, hey, something's not right. The market's high. We're at a multi-year high and everybody's already short. That's kind of a recipe for disaster. And that's exactly what happened is we got a really big short squeeze here in the US, which was probably triggered by everything going on in Europe and so on and so forth. According to the last COT report, traders are still pretty heavily short. We've wiped out a lot of it, but not all of it, which tells me we may have one more test to the highs somewhere. I don't know if we'll see, I don't think we'll see a new high. I think we could get up around $6. I'm just hoping it's a little more civilized so that traders could, actually do something with it, but we'll see. This is just for perspective. This is where we are. So a lot of people are looking at this and thinking, and this is why the option market went berserk also. We see in Europe, natural gas prices basically roughly over 20 is kind of how it's been. I'd
want to trust Vladimir for my nat gas supply this winter. How about you?
Oh, no, absolutely. It's really amazing.
He's a humanitarian.
It's totally amazing how things have changed just in 8 months in the energy space. It's really crazy. I agree with you, but people look at this chart. Yeah. Also, let me just mention, they're looking for, people are thinking if we break out here, guess what? We're going to $9-10. And so everybody and their dog was buying call options and call options with 30 days to go, strikes of $12, $14, $15 are going for thousands of dollars. It's just totally insane. Yeah.
So why don't we get to something dull? Like precious metals seem to be trying to bottom here. I mean, they held up pretty well with a strong dollar and higher yield, and they're higher today. I was wondering what you're thinking here.
I agree with you. I think they are bottoming. Metals are kind of mean. They're the type of market that it makes it. I mean, I'm not me personally. I'm not someone that is comfortable trading futures for some reason. Mentally, it just doesn't do it. Like it stresses me out and I worry about stops getting hit and things like that. So I prefer options. So this is a way to do it. The thing about
because
silver
you could be wrong for a day or a week and still get paid.
Correct. And in your mind, like this is an option trade we put out to our clients a week or two ago. I can't remember the exact date, but you get the idea. And the idea is we basically want to be long silver. So we could buy a 2250 call, which is a little in the money at this point. Sell the 2350 call. So it's just a plain vertical spread, but instead of paying for it, we sell a 20 put to mostly cover the cost. So I don't remember the exact cost to get in. It was maybe $500, somewhere in there, maybe 8 cents, 10 cents, somewhere in there. But
can you make $5 grand if you captured the buck?
Yeah,
Okay.
so if you held all the way to expiration, at this point, I think it's maybe 58 days somewhere in there to expiration. And if silver's above 2350, you keep the whole 5 grand. So it's a good
Nice.
risk reward, and you really don't have to get too stressed unless silver starts approaching 20. Below 20, you would have unlimited risk. So that gets a little hairy, and that's where things start to not be so fun. But you can do things like we encourage people to try to hedge. Like if let's say that it does get into trouble and silver does come and retest this line down here,
Yeah.
somewhere around
20.
21.
Yeah.
You may want to just sell a mini future against it. That way your delta's under control. And so if it does break below and sometimes silver has crazy moves. Sometimes it moves $1 in a day. You don't want to be caught with a naked short put on that. So if you sell a mini against it, stabilize it, see what happens. That's one way to do it. We had a similar idea in gold. I think this is
Before
it.
you leave that, just back there,
Yep,
when I
let me
look
go
at the
back. Yep.
wedge that you have in silver, Carly,
Uh-huh.
I was taught that markets could retrace 100% of a wedge, and so you have it up there around $28. That
Uh-huh.
to me is silver has potential to go there when we break out of the wedge.
Right. I think it does too. The problem was not the problem, but the thing about silver is it scares people out first. That's
Yeah.
just the nature of it. It'll look like it's literally going to $10 and then one day and then the next day it starts making its way to 28. So it's a wild one.
Anyway, it's
But
a great look, nice looking chart. I do, you do nice technical work. Okay,
Thank
so
you.
gold, here we are.
Yeah, so this is very, very similar position in gold. It's the same idea.
Yeah.
We're selling premium below these kind of wild spike lows.
Yeah.
Because if, chances are gold's probably going to stay above that. Maybe it won't, but that's pretty, I don't want to say safe. That's not the right word, but that's a reasonable place to sell an option.
Trading.
Yeah, exactly. So we sell that put to pay for our call spread. I think this trade we were able to get into for a few $100. So if the market trades sideways, I should mention on a strategy like this, if the market trades sideways and doesn't go anywhere, no harm, no foul. The premium erosion on the 2 short options, the short call and the short put, cover any premium erosion on the call. So it's no stress. If it goes up, you make the whole $100, so 10 grand possibly, if we're above 1850 at expiration. So it's a nice risk to reward, assuming gold doesn't crash. The risk of that is if gold crashes and you're stuck with a short 1675 put, but same thing, you can hedge with short futures. It does get messy and hairy sometimes, especially especially when things are moving quick. But
do you have a rule of thumb, Carly, on I think the biggest mistake people make in options, besides not taking in premium, is not buying enough time. That things always, for me, seem to take longer than I think they will, and I may think I'm buying a lot of time, and then in a few months it's not as much time as I think I need. So
correct. And then what happens with that is, let's say you put on a spread or a trade, whatever it is, and your options expire after a couple months, and then you think, well, it didn't work. I'll just move on. And then literally a week later, it does it.
I've seen them the day after expiration.
Yes.
It's amazing how they could peg it. So do you keep an eye on open interest in the options market, knowing that the writers are going to try and peg it at where there's a lot of, to try and fry both the call and put buyers?
Yeah. That is a thing that people look at. Honestly, personally, I look at the futures market and then cater my option trade to it. I don't really look at the options too much, unless they're just if they're too thin or something weird.
Yeah.
Although in nat gas, I did recognize that with the option market blowing up, kind of the pain trade in natural gas is because everyone's buying call. The reason puts gained in value as natural gas went up is because everyone's buying puts, right? Everyone thinks the market's going to crash like it has historically, and then other people think it's going up. So everyone's buying calls and puts at crazy prices on both sides of the market. So the pain trade is literally sideways, which is what I think will probably happen. Like everybody that spent all that premium, looking for a big move one way or the other, is probably going to get hosed on that, unfortunately. So I do look at those sorts of things. Yeah.
Yeah. So I think about, what you're doing here, looking for a pop in TLT and rally in metals, and it flies in the face of what everyone's thinking here about higher yields. And so you kind of have a natural contrarian attitude in the markets, don't you?
Maybe, yeah, I think that's probably a fair statement. Sometimes that works against me.
Yeah,
Sometimes it doesn't. It's just one of those things.
a
The-
friend of mine once said to me,
Mhm.
Carly, Dale, how many times do you have to get hit in the head with a ball peen hammer to know that it hurts? I
Right.
said, well, I know more than once.
Yeah.
Anyway, anything
Over and
else
over.
on the docket? And I want to give you time, even though you introduced yourself, for people
Sure.
that might be interested in executing option
Um,
strategies with you to
I
be able to
actually do
find you.
have a bit of a
Oh,
contrarian view. I mentioned the other guest was mentioning the currency markets, and
yeah.
um, for most of this year, I was bullish the dollar, but the way that it's behaving now that we've had this little rally it
Mhm.
makes me really kind of question it. To be honest, I actually think that, at least for now, I'm not talking forever, but the next couple of months, let's say, I think there's a pretty good chance that the dollar kind of rolls over and the euro makes a move higher. Now, the nice thing about the euro is the currency market has actually been very low vol for quite some time now. So
Yeah.
the options are cheap. So if
Yeah.
you want to play the upside in the euro, like we put out an idea to our clients to just buy cheap calls, like buy 118 calls for December. It gives you a couple months in the market. You don't have to spend more than $300, $400, $500 on it, just to have a foot in the door. Or if you
Are
want to get
they
a little more,
futures options
yeah,
based on the
yes.
euro
I'm
future?
sorry.
Okay.
Yeah,
All right.
futures options. Another
Mhm.
way to do it is to just go long the future, but then buy a put option underneath, which is what we've helped some clients do also. So that way they're long the future, but they have an insurance. So if this support does break and things start to melt down, you spent I think for $300-$400 you can get decent insurance to limit your total risk to maybe $1,000-$1,500, and that way you get a long futures contract without having to lose sleep at night. So
Another great interview, Carly. Really,
well, thank you
really
for having
appreciate
me.
it.
Yeah,
I really like your demeanor and I like your charts, and glad our
thank you.
paths crossed on
Yeah,
Twitter.
it's fun. Yeah, I
So
appreciate it. Thanks for having me.
so you're my trading warrior sister now,
Perfect. All right.
and I really appreciate you and your giving spirit to share your hard work,
Sure.
because
Of
I know you
course.
went through a lot to get to where you're at now. We all do.
Yeah, it's you know how it is. You know the grind.
Yeah.
It's a grind.
I hope you have a great fall trading season,
Thank
and
you.
that all your strategies come home for you and your clients, and
I hope
look
so.
forward to getting back together with you in a few months.
Thank you. I appreciate it.
All right, everyone.
Next time.
Carly Garner, and you could find her. There's her website.
Mhm.
Go ahead and give them
Yep.
it's thecarlytrading.com.
Correct. decarlytrading.com. That's us. You can sign up for a free trial of our client newsletters, kind of see some of the things that we're doing. There's a lot of educational material as well that's free. We think, an educated client is the best client. So we like to put a lot of information out there.
Yes, plus it doesn't take as much patience to work with them.
Well, you got that
So,
right.
well,
That is true. That's true. I'm not going to lie.
Yeah, thank you so much. It takes a
No
lot of
problem.
patience to teach, doesn't it?
It does.
Yeah, it does. Thank you so much, Carly.
Thank
Have
you.
a great day,
Appreciate it.
and
You too.
I'll send you a little note, and we'll set up another
Sounds
time
good.
down the road.
We'll
All
be
right.
here. Thank you.
Thank you, everyone. And thank you, Carly. And remember, don't just count your option strategies or your crypto, and be careful in Bitcoin up here. And don't just count those, count your blessings. If you're out there shooting and speculating, you're in better shape than most of the people out there in the world. And, appreciate what you have. I once heard that happiness is you're happy wanting what you have instead of having what you want. So think about that. And I'll see everyone tomorrow. Adios.